Ladies and gentlemen, welcome back to the channel. This is Crypto Wealth. You know me, I love crypto. I believe this technology is going to change the world. I believe in decentralization and the right to economic freedom. If you can agree with that, do me a favor and smash that like button. Today we're talking about the Beanstalk protocol. Now, the Beanstalk protocol, I think, is one of the most unique projects in DeFi right now, primarily because I think it serves an incredible purpose that is in high demand. It offers some potential for incredible earnings for those of us that are early, and it's decentralized by design initially. Now, if you see my previous video where I introduced Beanstalk, you know exactly what I'm talking about. If not, you want to go ahead and get caught up, I'll link that video above. Go ahead and go watch that video, learn about the mechanics, and try to understand what's going on here with Beanstalk, because this is one is important to pay attention to, not because there's a chance just to earn profit here, because I believe a project like this has an opportunity to reshape all of decentralized finance long term. This project is going to probably be one of my largest holdings if the next chapter goes as successful as the previous chapter. Now, this project, after the video where I talked about it and I introduced the project, they ended up having an exploit. When they had that exploit, then there was some funds taken because the governance proposal got exploited. And they've been working on setting up a system to raise the funds. And I say a system. In the previous video, I talked about how they were going to do this barn raise. And I really like the idea of the barn raise, but now they've got an idea that may be way better. At least I think it could be better for making certain that they get the funds back that they need. And I'll go into details about that in a moment. But first, let me tell you what I liked about the previous system. I like the previous barn raise because I like the decentralization of it. I like the community aspect of it. I like the fact that I just felt like there was a great mechanic in place to create just enough FOMO to help them raise the funds that they needed. And I think it stuck the truest to their current model, the Beanstalk model overall. And I thought it was really fair and I really liked it. Now, if you remember from that video, the challenge is, can they raise the full $77 million? And I thought they could. I thought there was a great chance they could. And the reason I thought that is because I misunderstood how much interest they were paying. And in the comments, someone corrected my math. I had the math wrong. I thought they were willing to pay up to, over time, I thought they were willing to pay up to 1,000% interest. And as crazy as that sounds, you would have to go watch the original video on the protocol. I mean, they were paying out crazy interest for a while. So I didn't think that was totally outside the realm of, Looney Town. But it looked like they were, when it was all said and done with that, I think they were only going to do about 200% interest, which is fine. That's still good. And they were supposed to be relaunching, last update, they were going to be relaunching this coming Monday. But there's a brand new proposal. Now, here's what I love about this project is still the DAO, the decentralization. The developers are like, hey, we have a possible proposal on the table from a VC who's willing to put in $8 or $10 million. Before we can approve that, we need to have the DAO to vote on these terms instead of just the developer saying, yes, we'll do it. And I love that aspect. They're sticking to the roots of decentralization. So I love that. Now, let's look at the proposals that's in place right now. It looks like it's going to pass. Let's talk about what they're looking to do. You all know me. If you follow my channel, even if I'm positive about a project, I can objectively tell you about the things I dislike on a project. One thing that you'll notice about my channel, a lot of people don't like that I'm not a 100% cheerleader every time. And even though I love crypto, I'm a cheerleader for crypto. I'm a cheerleader for decentralization. I'm a cheerleader for extracting value out of projects when we're able to do that. However, in order to be good at investing in crypto, you cannot be tribalistic. You can't 100% believe that one thing's going to go all the way and ignore the negatives when the negatives exist. And I'm going to tell you there are some negatives in my personal opinion, but I believe this is probably going to be a decent proposal. So let's go ahead and take a look at what they're proposing. Bean Farm's proposal 70. The path forward, OTC terms and timeline. Approve the following OTC deal terms. Beanstalk will borrow up to $77 million from lenders in exchange for debt at 500% weather. If you remember from my previous video, weather is just interest, 500% interest. Lenders will receive a fungible token that earns a pro-rata share of 1/3 of all new Bean mints until the debt is repaid. Beanstalk will unpause after the audits with Halburn and Trail of Bits are completed. Postpone the start date. By the way, I've got some ideas about this. Originally, the token was going to be the PODS token, but the PODS token is not tradable. I believe the reason the lender wants this token is because once they have a fungible token, they can literally sell that token through an OTC deal to somebody else. And the way they can do that is let the Beanstalk protocol launch, just like any other note sales or note buyers. You may not understand how that works, but let's just say that I bought a piece of property and I owner finance that property. Well, if I owner finance a property, let's just say I charge, 10% interest or whatever, just to keep it simple. Once that whoever the property buyer is, once they've paid on that note for 6 months to 2 years, the note is what's called seasoned. Any number of people or companies will buy that note. They'll typically buy it for 90% of, face value. And so that allows someone, should they choose to be able to exit a position and get that cash flow back. If I needed that money right now and I didn't want to, keep that lender for 20 years, then in 6 months to 2 years, I could sell that note and get all that money back. And there's plenty of people that would be willing to give me about 90% face value. I mean, that's how it works in traditional markets. And it looks like this is what this lender wants. They want the ability to be, whether they're looking to do it for sure, they at least want to have the ability through this fungible token to easily sell the debt. And by the way, this is such an incredible thing in DeFi just to think about for a moment. If someone could buy a property and you could transfer assets just simply by sending a fungible token, I mean, that's far better than title companies and all that nonsense. But anyway, sorry, I'm geeking out on the decentralization aspect of that. Let's go through the more detail. Postpone, and then I'm going to share with you a couple of things I don't like about this, just to be objective about it. Postpone the start of the barn raise until after the current OTC negotiations are complete, provided the entire $77 million has not been raised. Proposal. Since the passage of the BFP 69, Beanstalk Farms, Beansprout, and Publius have continued conversations with capital sources about structuring an OTC deal to participate in Beanstalk's recapitalization. However, Beanstalk needs DAO approval of the OTC transaction terms to begin accepting capital beyond soft commitments. Love this. Furthermore, it has become clear that most investors are interested in recapitalization Beanstalk under the condition that Beanstalk unpauses after the audits from Halliburton and Trail of Bits are complete. These audits are expected to complete in late June. Beanstalk could unpause shortly thereafter in late June or early July. Note the earliest Beanstalk could unpause without audits would be early June due to development work. This is reasonable. I don't like that it's so far in the future, but it's reasonable that investors who are bringing in potentially millions of dollars want to wait until after the 2 audits are complete. I think that's totally understandable. Thus, the following terms are being proposed. Beanstalk will borrow up to $77 million from lenders in exchange for debt at 500% interest. Lenders will receive a fungible token that earns a prorated share of 1/3 of new bean mints until the debt is repaid. Beanstalk will unpause after the audits with Halliburton and Trail of Bits are complete. Under these terms, there are confirmed commitments for 15% of the $77 million, and additional capital sources have demonstrated demand in excess of the remaining 85%. Supposedly, 15% are saying they're confirmed commitments, and then there's some soft commitments for the remaining 85% based on these terms above. It also makes sense to me that someone who bringing in millions want to know exactly what interest they're getting. So I can see why someone who is bringing in millions of dollars might not have necessarily loved the previous barn raise idea. Beanstalk Farms believes that running the barn raise in parallel with an OTC deal would be a strategic misstep, given the level of demand that the OTC structure had garnered thus far. Beanstalk Farms proposes postponing the barn raise until after the current negotiations are complete, if the full $77 million has not already been raised. Beanstalk Farms, Beansprout, and Publius believe that this proposal puts Beanstalk in the best possible position to maximize the amount of liquidity that is recapitalized while delaying the relaunch date by a marginal amount of time. A couple things here. I don't have any problems. If you knew you could get $77 million and you could do it at 500% weather, and this is how we needed to do it, I don't necessarily have a problem with that, except it's a lot less decentralized method of doing it. I mean, the fungible token is a cool concept, but I just feel like it's not as decentralized and it's not as organic. But that's just me being a little bit idealistic. At the end of the day, they've got to get $77 million raise. That's the best possible position to be in. It's a little bit unfortunate reading in the Discord because I think there's a lot of people that have no experience in financial markets outside of crypto or business markets for that matter. There's a ton of people, they're in the protocol. They're already, if the protocol launches well, many of them are going to do really well because they have the pod line and they have their stock, they have everything in the protocol, and they're going to be earning really, really well if this thing launches at full recapitalization of $77 million. If it launches at less than that, they're all going to take significant haircuts. But it's unfortunate to read in there how many people keep trying to look out. They're like, well, why can't we do this and why can't we do that? And it's all about giving them a better and better and better advantage at the risk of not fully capitalizing the $77 million. And I feel like the development team gets it. They know, to give this our best shot forward, we need to do everything we can to get the full $77 million. So I think this is probably the right decision. But let me just tell you a couple things I don't like about this. First of all, they said they have firm commitments for $15 million. 3 things I don't like about it. First, they said they have firm commitments for $15 million. I want to know, how firm is that commitment? Again, somebody who doesn't have a lot of experience, and I don't know the development team and what their business experience is. A lot of developers are very technically savvy, but I've learned that they're not necessarily, savvy when it comes to economics, tokenomics, or even business in many cases in crypto. I mean, that's just, or marketing, by the way. So I don't know what these developers' backgrounds are. So sometimes when someone says they have a firm commitment, I'm like, is that a firm commitment in writing? Or is that just someone who sounds very enthusiastic, when they say, yes, we'll commit at least, if you can get this done, we'll do at least $15 million. My question is, how close are we? How firm is that exactly? I don't really know. I'm just guessing. Again, this is not knocking the development team. I just don't know. This is me being honest with my own thoughts as a potential investor in this platform once they start raising funds. So that's my first one. How firm are those commitments? And then they say, well, we have, a lot of people, some soft commitments on the other, 85%. And again, the same thing. What do you mean by soft commitments, and how much exactly? Are people just randomly talking? What does that mean? I don't understand. How do you quantify? We have firm commitments versus soft commitments. Just as an investor, that's what I wonder. Literally, I read through this a couple of times, and I missed this thing right here. I didn't like this at all. Beanstalk Farm proposes postponing the barn raise until after the current negotiations are complete, if the full $77 million has not already been raised. See, I don't like this. My thinking is, wait a minute, if you're going to give venture capitalists, a shot at 500% weather, then I feel like the barn raise was not going to go that high, I don't believe. So I feel like you need to restructure your barn raise, and it doesn't mean they wouldn't do that, but you need to restructure your barn raise to give the other investors, the average investors who committed to this platform, like everybody should have a shot at that 500%. I don't have a problem with VCs, by the way. I don't like fault the rich. You will never hear me complain about whales. I think it's hilarious when people complain about whales, because if they own a project, you want whales providing liquidity in a project. Yes, whales can dump. So can the masses, and anybody can dump. That's how free markets work. Good projects don't have people dumping. I mean, that's how that works. Beanstalk Farms here, if they're going to do the barn raise, then I think they need to adjust the terms of the barn raise. Then the average investors in the protocol are the ones most likely going to be participating in the barn raise, and I think they should get a shot at the 500% weather as well. Just my thoughts, just my opinions. Let me know what you think down below. Now, let me just say this also. On my channel and on my newsletter, I'm always looking for projects. I'm always looking for things that can produce value for those of us that want to invest. Nothing in this channel is considered financial advice. I did just let my newsletter subscribers know about a project that's done over 43% in the past week. That we've been in a bear market this past week. It's been struggling. Stock market's getting crushed. Crypto's getting crushed. The past week, this token has done 43%. The past 24 hours, it's done about 7%. If you want to know about projects like that, then go down in the description, subscribe to our Crypto Passive Profits newsletter. Put your name, phone number, email address in there, and you will be subscribed. It's totally free. Thank you so much for watching. Decentralized cryptocurrency equals freedom. This is Crypto Wealth. I'm out.